Hey everyone, welcome back to the Finmineering channel. Today we're taking a look at Aurelia Metals, ticker AMI, on the ASX Stock Exchange of Australia. In FY25, Aurelia delivered on guidance, swung from a loss to an almost $50 million net profit after tax, and successfully transitioned the Federation mine into commercial production on the 1st of July 2025. We'll look at production trends, development rates, costs, cash flow, the Federation ramp-up, Great Cobar startup, sustainability metrics, and what it all means going forward. Let's start with production. Gold was the standout earlier in the period shown. We can see that gold production peaked in the March quarter, producing 16,000 ounces of gold, the highest quarterly performance in a long time. The result was driven mainly by high grade from the Peak South mine in Cobar. Following the March quarter, we can see that gold production dropped, which was planned. The company intentionally shifted to base metal rich ore to hit full year guidance. We can see that from the June quarter onwards, base metal production has picked up, most notably with zinc. Also noting that copper production had been declining prior to that period and appears to have had a slight bounce since the June quarter. It's something worth keeping an eye on given how high copper prices are at the moment. Any improvement in copper production would certainly be welcome. The increase in base metals is mainly driven by the Federation mine coming online in July. It's also a good segue to discuss one of the company highlights, being the Federation mine coming online. Ore mined at Federation jumped from 34 kiloton in March, 53 kiloton in June, 63 kiloton in September, and then 67 kiloton in December. That is a massive ramp up, and grades improved significantly in the December quarter. Zinc was at 18.2%, lead at 4.6%, and gold was around 1.2 grams per tonne. In terms of processing, the Peak processing plant throughput stayed strong. 150 kiloton in March, 175 in June, 191 in September, and near capacity at 187 in December. Recoveries remained solid throughout the period, with gold at 94%, zinc between 83 to 85, lead between 87 and 90, and copper between 81 and 88%. I consider these especially noteworthy as it's not always easy processing and extracting multi-commodity ore sources. Development meters also improved, and we can see a nice overall ramp up at both Peak and the Federation mine. The Great Cobar development officially started in July 2025 and reached about 950 meters by December. It's on schedule and on budget. Let's look at the financial performance. The company stayed resilient despite heavy growth capital spending. In terms of cash balance, the opening balance in the March quarter was around $97 million, and the company closed out December 25 at around $86 million, with total liquidity standing at around $115 million with the benefit of a $30 million loan note. The dips in cash flow was mainly a result of growth capital spend of $10 to $19 million per quarter, $12 million in tax payment in the December quarter, and additional cash backing for performance bonds. Operating cash flow from the Cobar region was very strong in December, almost $43 million, driven by high gold prices and selling down some concentrate stock. In terms of operating cost metrics, the company has switched from an all-in sustaining cost per ounce metric to an operating cost per tonne metric, given they now consider themselves to be a predominantly base metal producer. In March 2025, the company produced for around $303 per tonne. In June, $223 per tonne, which was their best quarter. In September was around $343, and in December, $372. The increase in the last two quarters reflects the Federation mine now being included as part of commercial production, and some temporary lower tonnes at Peak. In dollar terms, we can see the addition of Federation coming online, which of course is offset by increased production. As we touched on before, capital spending was elevated given the growth phase of especially the Federation mine. Since Federation came online, growth capital spending decreased, which was expected. Sustaining capital expenditure has picked up towards the end of the period shown. The result is not surprising and nothing to be concerned with at this moment. A few other highlights viewers often ask about. In terms of safety, the TRIFR rate has improved 50% year on year to 5.93 at the end of FY25, but rose again to 9.62 by December. There's been no recordable environmental incidents for about 15 to 18 months. In terms of exploration, positive results from Federation West extensions and the new lenses at Nymagee. We can see that the company is investing in exploration, which is a positive sign, especially with regards to the company's financial health. In terms of outlook, FY26 is looking good. The company reaffirmed guidance. Gold is tracking to the upper end of 35 to 45 kilo ounces bracket. Federation and Great Cobar is ramping up. Peak plant expansion is happening. It's an extra 1.1 to 1.2 million tonnes per annum in H1 FY27. It'll set the company up well for around 40 kilotonne of copper equivalent production by FY28. To wrap it up, Aurelia delivered on FY25 guidance and achieved a solid profit. It ramped up the Federation mine ahead of schedule, started Great Cobar, and kept cash above 85 million while investing in future growth. The shift to base metals is clearly underway, and with a strong gold and copper price and improving development rates, 2026 is looking promising. But no one knows how a rock will break, and execution on cost, safety, and plant expansion will be key. What do you think? Bullish on AMI? Drop your thoughts in the comments below. If you enjoyed this breakdown, please like, subscribe, and hit the notifications bell so you don't miss out on future updates. As always, this is not financial advice. Please do your own research. Thanks for watching, and until next time, see ya.